I've helped many people resolve their credit problems as quickly as 30 days for the purpose of getting pre-approved for a mortgage so that they can buy the house. And what we want to do is we want to talk about getting you in a better position for a higher credit score. And so by the end of this video, I'm going to make sure that I get you a secret tip on how you can actually improve those credit scores. Now, what we want to do is we're going to chop this up into sections, into steps, so that you can take the time that you need to do things the right way. So step one, what we want to do is we want to make sure that you can get a copy of your credit reports. Most of us will want to go to these different websites that we go to, but the first warning that I'm going to give you is that some of these websites don't give you the credit reports for each credit bureau. And so what I'm going to do is I'm going to advise you to go to a website called annualcreditreport.com. Now, this is a website that allows you to go in there to get your credit report for free. And you can actually do that once a year so that you can always check to see if there's any errors on your credit report. But the most important thing about going to this website is getting the credit report for each credit bureau. We got TransUnion, Equifax, and we got Experian. In my experience, when I've looked at people's credit reports in the past, there are times that there could be things that are reported with one credit bureau, but not necessarily reported with the second or third credit bureau. And there's a lot of inconsistencies with this. And this is why I'm educating you to dissect each credit report, because there could be some errors or some negative items on one report that don't show up on the other. And you don't want to address a credit bureau on a specific item if it doesn't appear on their credit report, right? So we want to make sure that we take the time to evaluate every credit report. And don't worry, I'm going to show you exactly what you need to do as we continue this video on how to be very specific and being able to identify some of these things. Now that we know where the website to go to, the second thing I'm going to have you guys do is make sure that you have a highlighter, right? And this highlighter is going to help us understand what items on each credit report have to be addressed. Step two, the second step that I'm going to have you do is I'm actually going to have you register for a credit monitoring service. There's hundreds of credit monitoring services out there. Some are better than others. But what I can tell you is that most of them operate the same. Some of these credit monitoring services might show you the credit report progress of one specific credit bureau. Some might show you 2 out of the 3. One of the most accurate credit report monitoring services that I'm aware of is called myfico.com. I love using this website because it's actually super accurate and it's probably as close as you're going to get to what a mortgage company's credit pull looks like. Now, on the downside of it is that it's not free necessarily. You can get a free plan, but it's only going to give you access to one credit bureau. If you really want to take advantage of the full capacity and the potential of this website, you're going to want to sign up for a service that gives you all 3, because you are committed to this process to make sure that you can evaluate what's good and what's bad and what progress is being made. There is going to be a link for you in the description box if you want to use that. Full disclaimer, they give me a little something to be able to get you guys signed up. But again, it is the best one to use. You can use other ones like CreditWise, or maybe the most popular one that people know about is Credit Karma. And again, these will be just as helpful. They're just not as accurate, but they do give you an indication of where direction is going on your credit report. And then a byproduct of that too is if there's something negative that pops up in your credit report that you weren't aware of, it would also tell you as well. Okay, now we're going to go to step 3. Now that you have each credit report in front of you, one of the very first things that we're going to highlight is something that is absolutely missed by a lot of people when they're going through the credit disputing process. What you want to do is you want to start in the section of where your name, address, date of birth, and social security are. It's usually on the first part of the reports. However, make sure you keep an eye on each one of them because it could be on the second page. But go into that section that shows the personal information. And what I want you to do is I want you to pay very close attention to the spelling of your names. If something is off whether it's an indentation, if it's a hyphen, if it's a former last name, and it's not accurate and present to what your current information is, then that is a reason you need to dispute it. Same thing goes for addresses, same thing goes for date of births, and more importantly, if the social security number doesn't match up to what belongs to you, that is something you're going to want to highlight. I can't tell you myself, in my experience, my father's name is actually the same name that I have, which is Jose Mejia. There's been times that our information has kind of cross-linked each other on our credit reports. So what happens is that on my credit report, sometimes I come off as Jose A. Mejia Sr., and that's not how I address my name. So that is the reason why I need to dispute it. But more importantly, the reason you need to know that these items need to be removed is because it might be tied into accounts that don't belong to you. How that happens, I don't know. Sometimes it's a data entry error on the part of some of these accounts. And if it doesn't line up with those specific accounts, it makes it much more difficult for a creditor or a collection agency to actually validate that that account belongs to you, because that is their job. Their job is to show proof that you are the owner of that account. Now that we've addressed some of the personal information, we're going to go into step number 4. And what we want to do is we're going to want to focus on the negative items that greatly impact your credit score. So what we want to keep an eye on here is we want to keep on some of these items that are hindering your credit score. And the very first thing that's super important that you want to look at is your payment history. Your payment history actually makes up about 35% of your credit score. And so this is a big weight that the algorithm of the credit bureaus takes a look at every month to say, have you been present with your payments? When you are late on one of your accounts and it's a recent late payment, and I can almost tell you recent being defined as the past 12 months, it tends to have a huge negative impact on your credit scores. The reason why is because it's recent behavior that alarms the creditors that you're either falling behind or there's something going on with your financial economic situation. And sometimes it could just be a missed payment because we forgot in our busy lives to make that missed payment. Very first thing you want to do is you want to highlight where is the late payments, and specifically if it is a recent late payment. The very first thing that I would encourage you to do is first call the creditor and ask them if they can give you some grace and some mercy to remove that late payment. Give them a reason of why you were late, and maybe they'll give you the ability to make it up to them by having them remove the late payment and continuing to use that credit card and make those payments on time. Now, not every creditor is going to be graceful in that way. And so what you're going to want to do is, if those late payments weren't yours and you know they didn't occur, then what you're going to want to do is you're going to want to make sure that you're disputing those late payments, specifically the ones that are the most recent. Again, the recent being that they just happened in the last 12 months. Here's a little extra tip when it comes to late payments. Make sure that you have your account set up to at least collect the minimum payments automatically from your checking account. Listen, what happens is that we're trying to not just correct what happened in the past, but we're trying to make sure these things don't happen in the future. And if they do happen in the future, it's really defeating the purpose of trying to get your credit scores on track and doing this whole process. So make sure that you take some time to actually go into these accounts and set up auto draft at the very minimum payment. So here's the fourth thing that I want you to look at, and this may help you as you're actually going into your creditor accounts and you're taking the evaluation of what's good and what's bad. When you're looking at the creditor accounts, I want you to look at what the credit limit is and what your balance is. The utilization rate is a second key component to trying to figure out how great your credit scores can be on a month-by-month basis. We covered the first one, which was, are you paying your payments on time? The second one is that credit utilization rate, and it actually accounts for 30% of your credit score. Now, the great thing about this is that if you're someone like most people in America, if you're someone that uses debt a lot, because we do fall on hard times, you can always recover from that as long as you create a nice game plan of making those payments and lowering the balance on those accounts. Anything that is beyond 30% of the credit limit is usually having some form of impact on your credit scores. Therefore, the very first thing you're going to want to do is you're going to want to bring that balance down at least to 30% of the credit limit. So let's use an example here. If you have a credit card and it is a $1,000 credit limit, a $300 balance is 30%. Anything beyond $300 is going beyond the 30%, and it's actually having a negative impact on your scores. So if you do have a $500, $600, $700 balance in a scenario like that, what you want to do is you want to get it under 300. And that is going to be your first goal, is to look at each credit card that you own first and get it under 30% so that it helps increase your credit scores at another tier. Focus on the credit cards first, because the car note and the student loans, those can be very difficult because you might have a higher balance. But the thing behind that as well is that it's a whole different type of credit. Credit cards are revolving. Student loans and a car note are called an installment loan. And the bureaus, when they're determining what your credit scores are, they tend to have much more of an emphasis of evaluating your revolving credit versus the installment loans. And that's a key, nice little tip there for you guys to know, is to always prioritize the payments and the balances on your credit cards first. All right, so we're gonna go over some of the remaining things that actually account for your credit scores. But now that you got these credit reports in front of you, you should have them all highlighted per bureau. And then what you wanna do is you wanna find a dispute letter and actually make sure that you're very specific about what item you're disputing and the reason why. And then you wanna go ahead and sign off on that and make sure you mail it out. Now, these are things that are tackling some of the negative items on your credit report and some of the erroneous items that are on your credit report. And now we've also covered the fact that payment history and balances are also something that supplement getting these credit scores higher. Number 3, 4, and 5 of the things that actually impact your credit scores have had to do a lot with the mix of credit. We talked a little bit about revolving and installment. When you have a mix of credit like that, it actually helps your credit scores because they see that you're utilizing your credit for different purposes. Now, the way it helps your credit is not as significant as keeping your balances low or making payments on time, but it does help, okay? And it actually accounts for 10% of your credit score. If you are a person that's had established credit for a certain amount of time, the history that you've had that credit for is also something that accounts for 15% of your credit score. If you know people that have had a couple credit cards and they've had these credit cards for like 10 plus years and they've been making their payments on time and they have their balances low, those are usually the people that are in the high 700s into the 800 credit score mark. They almost have flawless credit. Making sure that you keep your credit cards open, making sure that you're paying them on time, even when you're not using a credit card, you're going to want to keep it open because you want that history that helps your credit scores as well. Now, there have been times that I've talked to people, and this is also including myself, is where I'll have a credit card that I haven't used in years. And what I'll do is every once in a while, I'll use it just to keep that account active, because some creditors, if they see that you haven't used your credit card, they might automatically shut you down. And so I want to make sure that you are constantly using some credit cards, not in an excessive a way, but just enough where the creditor can say, okay, he is still or she is still using this credit item. The last thing that you need to know about is the credit inquiries. Actually utilizing your credit and your social security number is actually helpful. It actually accounts for 10% of your credit score. Now, one would think, well, how often should I use it? There's no really set amount, but you just want to be responsible. You don't want to over abuse it. You want to make sure that you're using it 2 to 3 times a year and just having your credit checked for something so that they can see that you are a person that's active in using the credit that's available to you. Because if you're not, there's no way that the credit bureaus can determine how you pay your credit in the present day so that they can give you the ability of actually borrowing you more money, especially when it comes to actually buying a house. And now I got the secret tip for you. If you find yourself at a place where your credit score is just not high enough, but you need that extra bump, And what I mean by that is I've had plenty of times where I've had people in the 580, 590 mark, and they're looking for that 620, 640 credit score so that they can get qualified and get a better interest rate. What I would encourage you to do is find someone that trusts you and you trust them. And you want to be able to be added on their credit report or their credit card as an authorized user. Now, before you go do this, make sure that you talk to that person. You want to let them know that you don't need a credit card. That's not the purpose of the strategy. But what you do want to know is how long have they had that credit card for? Are their balances 30% or low? And have they had any recent late payments on that credit report? And I know it's a lot to ask. This is why it has to be a trusted person. Because if you do add yourself into an authorized user onto their specific account, you don't want any of the negativity of their account to reflect on your credit report and your credit scores. So you want to find an account that that person has that is almost flawless, where you inherit all the positivity of that history of that specific account. And what typically happens is that that account will appear on your credit report within like a 30-day time frame. And what typically happens is that your scores will shoot up to the point where your credit score is in a place to where it needs to be. Make sure you check out the link below in the description box. If you need more references about credit, I'm more than happy to help. Thanks for watching.